Let's bring in Mike Murphy. He's our markets guy and has been for many years on the Varney Show. Mike, going to talk about Didi if we can. Shares tanking today after China banned it from their app stores. You know, my question to you, and we've asked you this before, should investors be more concerned about putting their money in Chinese companies? It's hard to do your due diligence and very hard to figure out what the Chinese government is going to do.
Good morning, Ashley. Great to be with you. Yes, you have to be, investors need to be careful around new issues, around IPOs, new companies first coming to the market. And then there's a whole nother level of due diligence because in China, the accounting regulations aren't the same as they are in the US. So although Alibaba was a massive winner, think back, another large Chinese company called Ant Financial was going to be going public. And then there was a lot of government intervention there with that one as well. So I think for a US investor, when I look at Didi right now, I see this sell-off based on what the Chinese government did. I think it creates an opportunity here, Ashley. I mean, it's a huge company in China. They call them the Uber and Lyft of China. But this sell-off here today, I think the government will step away. And I think for the very aggressive viewers looking for a trade, I think Didi's a good entry point here.
Do you have exposure to Chinese companies in particular?
I don't. And for the reasons that I said, Ashley, I'll be looking at Didi for a trade. But long term, there are so many opportunities here in the United States, both private and public markets, that there are great companies over in China as well. But I know the U.S. better. I understand the U.S. regulations better. So until I conquer the U.S. and get all the great private companies that are going public here, until I reach that point, I'm going to stay away from China specific, but really, I'll say all economies where you don't really understand the government or what the government may do.
Right. Very good. I want to mention that 10-year Treasury yield. Haven't seen it down at 1.35% in quite some time, which normally means we see money come out of that because the yield's going down and go up into, go into the equity markets. But we're not seeing that. The Dow off 400 points. How do you explain the market moves today?
Man, I wish I had the quick explanation on that one. Really what I think it is, Ashley, is that a lot of traders thought it was a good idea to sell bonds, which increased yields earlier this year. And we talked about yields going higher and yields breaking above 2% and money coming out of the equities market into the bond market to chase that yield. But really, you still have an accommodative Fed. So you have rates that are down here, and they're going to be down here for some time. The concern for me as an investor would be if the Fed were going to overreact or make a knee-jerk reaction that would spook the markets. And I think now what we've heard is that you're not going to see that. So rates will eventually climb back higher slowly. But I think in the meantime, you have U.S. corporations, Ashley, that can borrow money at a very low rate that can grow their businesses and therefore impact their bottom lines. So I think that the bottom line story here is that rates are going to be low for a long time and corporate earnings are continuing to grow. They're being measured against a very low number for last year. So the backdrop for the U.S. markets, although you have a sell-off in the Dow today, backdrop is higher earnings, therefore higher stock prices.
Yeah, all very optimistic. All right, Mike. Mike Murphy, as always, great stuff. I have to leave it right there. Mikey, thank you very much for joining us on this Tuesday.